Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
David Lane from Ord Minnett and Mark Gardner from MPC Markets are here with me to discuss our stock of the day being ASX Limited. So the listed entity, after news that it's back up and running following a software glitch late last week that halted the settlement of transactions. So the stock exchange operator says it's been working across the weekend to resolve the issues with its critical settlements processing system, which has meant that trades made last week could not be settled. So trades from last Wednesday are being processed today. Let's check in on the share price, up by a percentage point today. Interesting one to have on the radar. Well, David Lane from Ord Minnett, this all has to do with that chest replacement, which has been ongoing for years. So using some old technology. This is not a good look for the ASX overall.
No, you're right, Nadine. It's not a good look. I'm surprised that the share price is actually up today. That, as you said, they've been working all weekend. Thankfully, they were able to fix the issue, so it means that trading is happening today. But yeah, it does mean that there's a delay in settlement from any of the trades that were supposed to settle on Friday are now settling today. So, although it's an inconvenience in the short term, I think long term it does actually, as you say, highlight the fact that the CHESS system is in need of replacement. The ASX was looking at replacing that many years ago through the blockchain and new technology, but then that's all been shelved. They've written off a lot of money as far as that new technology is concerned, and now we're still using the old CHESS system. So yes, not a good look for the ASX. We haven't liked the stock for a while. We've actually got a lighten recommendation on it, and they're currently trading around that $65 mark. Our target price is $60.70, so we think that there is further downside in it. And it's relatively expensive at the moment, trading on a PE of around 26 times. So for a company that really has to invest a lot in new technology, fairly expensive, I think, at the moment.
So you would avoid this one?
Yes, and yeah, we've got a lighten, which is effectively a soft sell recommendation. So if you've got it in your portfolio, I'd probably be looking at least selling some of it. But it's probably a stock that, yeah, if you don't already have in your portfolio, I'd be avoiding at the moment.
Thank you, Mark Gardner. I mean, the reality is that it does have a hold on a lot of the trades that go through here and a lot of the listings here in Australia.
Yeah, and look, that's fairly government mandated. But this is just another example of the government having to basically loosen a monopoly to the market because these guys aren't delivering essentially overall. I think when they went to that the commission or the House hearing or whatever it was last year, they basically were told, get your act together or that monopoly disappears.
Yeah.
And I think that's the big risk with this stock, is that it trades at a premium because it's an effective monopoly. I mean, they knocked back the Singapore exchange, 15, 20 years ago, basically saying that it was in the national interest, etc. But if they keep dusting huge amounts of money, we're not looking at a CHESS replacement now till 2029. Yeah. I mean, we are going to be so far in the dark ages by that point. I've been involved on the future side in a lot of beta testing for their systems, and traditionally the which was the Future Exchange, which then became the ASX, when they just went and bought a system offshore and just plugged it in, they were the best launches. I don't know why they've decided to have to do this all themselves. And it's ended up being a fairly large disaster overall. So, but look, I think, yeah, I'd be selling it at this point in time, particularly from a long-term standpoint. If it does sort of, I think from a short-term point of view, if it got really hit, and you were getting it at really cheap valuations, there's no way that monopoly is disappearing in the next couple of years. M&A activity and IPO activity should start to head up a little bit. The clearinghouse obviously takes a larger clip with the higher interest rates for longer as well. So there are some positives, but what I'm really they've missed earnings the last the last 4 times they've released earnings in a row. We're in a pretty horrible downtrend. You would definitely not buy it here. I'd be, as David said, at least lightning. But it might be one that, it is a necessity for at least the coming couple of years. But the more of these instances that happen,
weaker footing it's on.
Well, it just becomes.
It also costs a lot of its partners a lot of money over the past however many years.
Exactly. They're obviously they'd be very happy to get on board, and there's a lot of very aggressive exchanges out there that that are much bigger, much better funded, have existing systems that set up that are much better technology, and all they're doing is opening the door here for the regulators to go, I'm sorry, but here you go.
Yep, we will see. All right, so that is the stock of the day being ASX Limited, and it is a sell.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.